No one really explains how a VA home purchase should be approached if there's a good chance you'll PCS in the next few years. And there's a huge difference between buying with zero money down and buying with equity from a previous home sale. Today, I'm going to walk you through both paths, explain what most military families miss, and help you understand how to make a decision that still works years after you leave Colorado Springs. One of the big mistakes I see military buyers make is focusing entirely on getting into the home and not spending enough time thinking about how they're going to get out of it. As military families, your housing decisions don't happen in a vacuum. You may be here for 3 years, maybe 4, maybe 5. Then PCS orders show up and suddenly the home you bought becomes a financial asset that needs to be either sold or converted into a rental. The challenge is that the strategy should look very different depending on whether you're using a VA loan with no money down or whether you're bringing equity from a previous home sale. Let's break this down step by step. First, let's talk about the military buyer using a VA loan with no money down. This is one of the greatest benefits available to military families. The ability to purchase a home with little to no money down gives many families the opportunity to build equity instead of renting. But here's what often gets overlooked. When you buy with no money down, you start with very little equity. That means if you receive PCS orders in 3 years, your ability to sell profitably may depend heavily on what the market does during those years. Many buyers assume appreciation alone will solve that problem. Sometimes it does. Sometimes it doesn't. That's why the first phase of the process isn't actually finding a house. It's identifying a property that gives you multiple exit strategies. Before you ever make an offer, you should be evaluating questions like, would another military family want this home 3 years from now? Would it make a strong rental property? Is it located in an area with consistent military demand? Does the price point appeal to a large buyer pool? Would the monthly rent potentially cover ownership costs if you had to keep it? These questions matter because your future options matter. What surprises many military buyers is that the home that feels perfect today isn't always the best financial decision for your next PCS. The responsibility here falls on both the buyer and the realtor. The buyer provides the family's goals. The realtor helps evaluate future resale strength and rental potential. An experienced military-focused realtor should be helping you think beyond move-in day. Because if your goal is long-term financial success, the purchase decision has to account for what happens when you leave. Once you've identified the right property, the next phase becomes ownership. This is where patience becomes important. Many military buyers assume they'll simply sell when they PCS. But for zero down buyers, the stronger strategy is often planning to keep the property as a rental for an additional 2 to 4 years after leaving. Why? Because additional time often allows for equity to grow through appreciation and principal paydown. It also gives you more flexibility regarding market timing. Instead of feeling forced to sell immediately during a PCS move, you may have the option to hold the property until your financial position is stronger. If this raises questions about your situation, there's a link and our phone number in the description where you can get clarity or ask us directly. Now let's talk about the second path, the military buyer who's bringing equity from a previous home sale. This is a completely different situation when you've already owned a home and you're arriving in Colorado Springs with substantial equity. You typically have more options available from day one. You may choose to put a significant down payment toward your next home. That immediately creates a larger cushion. It can reduce monthly payments. It can improve cash flow if the property eventually becomes a rental, and it often provides for more flexibility when PCS orders arrive. The process itself is similar, but the risk profile changes. Instead of relying heavily on future appreciation, you're bringing equity into the transaction from the beginning. That creates additional comfort when evaluating future resale opportunities. It can also open doors that many military buyers don't initially consider. One example, a VA loan assumption. A growing number of buyers are paying attention to assumable VA loans because the opportunity to potentially take over an existing low interest rate mortgage. However, assumptions often require the buyer to bring the difference between the remaining loan balance and the agreed purchase price. That gap can be substantial. Military buyers who have equity from a previous home sale are often in a much stronger position to navigate those situations because they already have funds available to cover part of that gap. And if you'd like to have a deeper conversation about VA assumptions, don't hesitate to reach out. But again, this doesn't automatically make one path better than the other. It simply changes which opportunities are realistic. Now, let's talk about a few common misconceptions. The first misconception is that no money down means no risk. The VA loan benefit is incredible, but every real estate purchase still deserves a long-term strategy. The second misconception is that appreciation always solves everything. Markets move in cycles. Good planning creates options regardless of what the market does. The third misconception is that all homes make equally good rentals. They don't. Some properties attract consistent tenants and maintain strong demand. Others struggle. That's why evaluating rentability before purchase is so important. Another area where people get stuck is trying to predict the future perfectly. You don't need to know exactly when you'll PCS. You don't need to know exactly what interest rates will do. You don't need to know exactly what the market will look like 3 years from now. What you do need is a property that gives you flexibility. The military families who tend to navigate PCS moves most successfully aren't necessarily the ones who bought the cheapest house or the biggest house. They're the ones who bought a property that gave them multiple paths forward. A home they could sell, a home they could rent, a home that appealed to future buyers, a home that fit both today's needs and tomorrow's possibilities. At the end of the day, the question isn't whether you should buy with zero money down or buy while bringing equity from another sale. Both can be excellent strategies. The real question is whether the property you're buying today will still make sense when you're no longer living in it. You can answer that question confidently. You're already ahead of where most military buyers start. If this was helpful, make sure to like and subscribe so you don't miss future videos, and check out the next video. It builds on what we just talked about and will help you take the next step.